So Joseph, the iron ore price has been steadily declining for some time. Now we're below $100. What gives? What's going on?
Yeah, it's actually at $92 at the moment, and it began the year at 130. So that's quite a slow drift, but a very certain drift down compared to like a sudden drop, because like Chinese data or something sort of flashing a crash or something like that. And that to me says the iron ore market is oversupplied. Now we have to remember, whenever we talk about the iron ore price, we're talking about spot prices, which are only sort of like 20% of the market. The rest of it is in sort of long-term contracts, but those contracts still respond to spot prices because they're reset often like quarterly now. So yes, oversupply is starting to really hit the market, I think.
So is there something that producers should do about supply now, or?
Yeah, you think, oh right, okay, well let's just switch off supply, yeah? But iron ore doesn't quite work like that, especially when you look at monsters in iron ore volume such as BHP Billiton and Rio Tinto, because the narrative in mining over the last few years has been you can't build new mines, shareholders won't let you waste that money, so you'll invest in brownfield. And for Rio and BHP, brownfield is these massive existing iron ore resources in Western Australia, which they can just add fresh tons to and produce at very low cost. And so for a Rio or a BHP, if you're producing at, I don't know, like $22 a tonne, it really doesn't matter if you're selling at $90, $80, $60. The sting in the tail is what happens to higher cost producers.
Ooh, so what's going to happen? Are they doomed? Is everything doomed here?
Well, it's really like, is overproduction going to stop? And the answer seems to be no. What happens to kind of higher cost producers then? Because you have plenty in China itself. They're in a very vulnerable position of the cost curve. You have smaller Australian miners like Fortescue, which has plenty of debt and had a pretty bad time the last time iron ore prices tanked. It's almost like, the Game of Thrones, yeah? Like the Birkin TV series, like you win or you die. In iron ore mining, there are people who will win, like the low-cost miners, but does that mean the higher-cost producers will die? Well, actually, that's an interesting question, because maybe not. Because the way restructuring works, in terms of debt, if producers do go to the wall, they don't necessarily stop production even then, because the creditors just take over and continue running the assets. So if that happens in the iron ore market, then watch out. But yeah, it's interesting times ahead.
Yeah, very interesting. Okay, great. Thanks a lot, Joseph.